Did the Fed miss a golden opportunity on Wednesday? And what does that mean for the stock market in the short term? Let's discuss. If you looked at what's going on in the stock market today, right now I'm recording this on Friday. It's about 11 o'clock Central, and the Dow's off 800 points. It was off 900 points. The S&P down 105 points. That's almost 2%. And the NASDAQ down about 2.2%. So off about 375 points there. So what's going on with the stock market this week? Well, Jerome Powell spoke. The Fed met this week on Wednesday, and he decided, or I guess I should say the committee decided, and Powell gave some testimony at a press conference, that they're not going to cut rates in July. So the next opportunity, really, if they kind of keep with the theme of making these decisions at the FOMC meetings, that's not until September. So we're like 46 days, 47 days away. So got a lot of time between now and what's probably the next opportunity for them to make a rate cut. He decided, or they decided, he spoke and said, September rate cut is on the table. I want to read a couple of quotes from his press conference. He said, "I don't think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market. The Fed's got a dual mandate. They've got to maintain maximum employment and stable prices. And what's been in question for the last few years has been that second part, stable prices. Because we've had inflation that ran away and topped 9%, within the last 2 years, and it's been coming down. The trend has been, it's been moving lower. As a matter of fact, the PCE index, personal consumptions expenditures index, that's what the Fed keeps its eye on. It's now at 2.5%. So it's nearing their target of 2%. And he's repeatedly come out and said, inflation doesn't have to hit 2% before we make our first rate cut. We just want to see that trend continue of inflation cooling. Well, a lot of people have been arguing that trend has been in place and we're approaching the Fed's target. So the Fed should start cutting rates now before it's too late. Well, the Fed decided we're going to hold rates here, and that first rate cut is on the table in September. But now it's the other side of that dual mandate, the maximum employment, that's really showing some, I would say at this point, pretty significant signs of weakness. So the unemployment rate came out today, earlier this morning, moved up to 4.3%. Now, 4.3%, historically, that's still a low number. But that rate, within the last year was at 3.4%. So we've seen a pretty significant move from 3.4 to 4.3. That translates to a lot of jobs. We also had an employment report that came out on Thursday. So keep in mind the timeline of this was Jerome Powell spoke on Wednesday and said, we don't want to see cooling in the labor market. We're going to hold rates here and maybe think about a 25 basis point cut in September. Well, less than 24 hours later, we had a weekly unemployment claim number that came in higher than expected. So about 250,000 people last week filed for unemployment insurance. That is a number that is higher than what was expected. It's about as high as it's been in about a year. I think last August was the last time we saw a number at 250,000 in a week. And then Friday morning, so Powell spoke Wednesday, decided not to change rates. Thursday, we had some worse than expected news on initial jobless claims. And then Friday morning today, we had non-farm payrolls, which looks at how many jobs were created last month. So for the month of July, that number was 114,000. It's been averaging about 250 to 260,000 per month. That number of 114, that was expected to be a slowdown, but that is a number that's below what Wall Street economists were expecting. So in the last 24 hours, we've had two signs that the labor market is showing signs of cooling, exactly the opposite of what Powell said he wanted to see. So now the big question is, did the Fed wait too long? Should they have cut rates? Did they miss an opportunity to do that and signal to the market and to the economy that things are moving in the right direction? We're going to get ahead of this and make that first rate cut. He said that they weren't even thinking about a 50 basis point rate cut when they meet in September. He said, they're thinking about 25 basis points to begin. Well, 2 days ago, when he said that, the Wall Street, the Fed funds futures market was assigning about a 90% probability of a 25 basis point cut in September and only about a 10% probability of a 50 basis point. That's really considered two cuts at a time, 50 basis point cut in September. So very low odds. The market and Powell were kind of on the same page on Wednesday. That's totally changed 48 hours later. Now we've got about an 80% implied probability of a 50 basis point cut in September. So we've kind of gone through these cycles this year, really over the last year, where the Fed and the market were not on the same page with expectations for rate cuts. At the beginning of this year, the market was expecting 5 to 6, maybe 7 rate cuts to take place in 2024. The Fed had said all along 2 to 3. That's our expectation. Well, over the summer, those, the Fed and Wall Street kind of got back on the same page of saying, probably only 1 to 2 rate cuts through the remainder of the year. Well, now we find ourselves on August 2nd, where Wall Street is back to expecting 5 to 6 rate cuts, and it's already August. And so that only leaves us with 5 months left where the Fed's going to cut rates, 4 or 5 times, maybe 6 times. We're going to need, probably a couple 50 basis point cuts if we're to get what Wall Street's expecting. And who knows, the Fed is saying they're going to remain data dependent. So we'll see. They are going to meet this month over in Jackson Hole. And I would expect that we'll get some commentary from the Fed on what happened with the July jobs numbers. We'll, have another inflation report. I think we'll have maybe 1 or 2 more inflation reports out, and another non-farm payroll report out before the Fed meets in September and decides, are we going to see a 25 basis point cut or a 50 basis point cut? But I think you could argue that if the Fed is trying to skate where the puck is going, you could make an argument that they should have cut rates and missed that opportunity. So if you'd like to read more about this or let me know what your thoughts are, I'm going to be sending out that email tomorrow morning. I'll finish it up this afternoon. If you'd like to be on our email list or if you have questions for us, feel free to email us at hello@dogwoodwm.com. Thanks for watching.